Like, okay, the bull market is confirmed. We went from 70 to 110, down to 70, back above 110, maybe at 150 or 200 or some level, like on rising volume, very good looking technical chart. Okay, now it's time to go into the shitter and try to find some gems. So I think that we're going to get a much more dovish Fed at the minimum, at the latest from May 2026. So we could see that 2026 to 2027 is absolute bananas. Well, everyone's just like, oh my God, they're just like, they're going to do everything. Everything QE and supplemental leverage ratio and Treasury buybacks and yield curve control. It's all on because everybody's on side with Trump. And then we'll extrapolate a change that's too large. And then we correct.
Where do you think that we top out, and what price do you think we top out at this cycle?
I think 2025, my end of year target is 250,000.
250
for Bitcoin. I think that we're going to get the maximum.
Arthur Hayes is prepared to advocate for a seismic upheaval in the banking industry. Hayes warns of an impending storm that might propel Bitcoin into the stratosphere as central banks throughout the world plunge into unknown territory. A $250,000 Bitcoin might only be the start by 2025 as governments rush to generate money on a never-before-seen scale. The scenario is set for an enormous spike in inflation and asset values as the Fed's next leadership, most likely a Trump-appointed proponent of free money, speeds up the printing machines. Hayes uses strong words. This is the breakdown of the dollar's hegemony, not just a surge in inflation. Bitcoin has the potential to become the best hedge if yield curve management, treasury buybacks, and unrestricted stimulus collide, while conventional markets falter. The clock is already ticking down to this financial catastrophe. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you, and enjoy the video.
In 2022, in the third quarter, everyone was super bearish on crypto and other risk assets. Why? Interest rates are rising. The bond market was collapsing, stock market's going down, FTX is imploding, nobody wanted to own crypto, Bitcoin hits 15,000, people think it's going to 10,000, that kind of stuff, right? And then out of the blue, Janet Yellen comes back with, not QE, this activist treasury issuance, issuing more bills and bonds, taking $2.5 trillion that are sterilized on the Fed's balance sheet and moving that into the global markets. And we saw risk assets from December of 2022 till early 2025 pump. Bitcoin up to 6x, stocks doubled, gold doubles, everything is great. But the Fed has not really been that accommodative over that period of time. He just stood by, Powell sat in his cuck chair and got fucked by Yellen, right? Yeah. And that is the set we have today. It's a little bit different. So we have Bessent in charge. We have another issue with tariffs, right? Bond markets melting down, stocks cratering. Oh no, inflation is going to rise because China's not going to provide cheap goods. I'm very uncertain. I don't need to own Bitcoin. I don't need to own these other assets. But what happened? The authorities saw that volatility was increasing, and Bessent gets on TV and talks about treasury buybacks.
Yeah.
Which is essentially a way for them to relieve pressure on balance sheet constraints, which allow the banks to lend more money to hedge funds to buy treasuries at auctions in this thing called a basis trade. And so I think that is going to be the bottom moment of this particular cycle when Bessent got on Bloomberg and gave that interview saying he's got buybacks and he's going to make sure that the treasury market is well supported. That was a signal to go long everything. These hedge funds, they own bonds. They have a trade where they buy a bond, they sell a derivative futures contract. And they take that bond to the bank and they say, hey bank, I don't have any money to buy the bond. Can you give me the money? Mm-hmm. And they say, okay, yeah, sure. I'll look at the bond. It's a treasury bond, very liquid collateral. Here's some money. I want you to put a certain percentage of equity against that. Now, they need a lot of leverage to make this trade work from a profit standpoint. And so the less equity the bank requires, the more leverage they get, the more they do the trade.
Yeah.
And these hedge funds show up at the auctions and they say, I don't care what this bond is priced at because I'm just trying to trade this differential between a bond and a derivative. So yeah, the US balance sheet is fucked because it's $36 trillion and all these sort of issues, but hey, I'm gonna make 10 basis points, lever it up 100 times. I'm sweet, I don't care what the price of the bond is.
This is kind of like the same basis trade that we saw when the ETFs first launched and then when it...
Well, this is in the bond market. It has nothing to do with crypto.
Right. Okay, so but also you don't think they're gonna go buy Bitcoin ETFs to
this is
that basis trade?
No, this is all about how do we get dollars into the system?
Right? Yeah.
So these hedge funds, they show up and they buy the treasury debt that Bessent is issuing. Now the issue is that as a bond matures, it becomes less and less liquid as it moves further away from the benchmark tenor. So what can Bessent do? Well, he can do a budget neutral, supply neutral thing where he issues a new bond, he buys back the old bond. So now the old bond trades a bit expensive.
Right.
The spread narrows between the old bond and the futures contract. The hedge fund makes a profit. Now their books are relieved of the old bonds that required a higher equity capital charge. They get these new bonds that they can get more leverage on. They made a profit, and now they can do this trade even more. Mm-hmm. And so Besson is essentially clearing the bank's balance sheet so they can lend more money to these hedge funds who can show up at the auction and buy the debt at a very expensive price and buy a lot of it. Trump is just accelerating a trend that was already present. He started a trade war in 2018.
Yeah.
Biden continued it. He has intensified it. He's backed up a bit, but if you've looked at how Trump does negotiations, he starts with a maximalist position. He walks it back. He looks more conciliatory. Then he comes back again at you with more maximum pressure to sort of get the best deal that he can given the set of facts. And so I think that's going to happen again. And so we're going to see some more volatility in the financial markets. But the best thing that we have figured out is that 140 on the move index elicits an immediate policy response. So you don't have to worry about
Say
it.
that again?
140 on the move bond volatility index elicits an immediate policy response.
Okay.
The day that move hit 140, went to 172 intraday, Jamie Dimon gets on CNBC and talks about how bad tariffs are and how the bond market is having issues. Trump immediately does the 90-day pause. And Besson gets on TV talking about treasury buybacks, and the Fed, Susan Collins, says they're ready to do whatever it takes. So the market, the American empire cannot handle volatility, nor can any other country around the world. Bitcoin thrives in that situation, so we don't need to be worried.
Now that the deficit is out of control and tensions between the US and China are increasing, there is a significant risk of another liquidity crisis. These turbulent times are ideal for Bitcoin, and when politicians act in control, their desperation is just fueling the cryptocurrency's growth. A financial catastrophe is not merely a possibility, it is an inevitable fact. When the financial system does eventually collapse, Bitcoin will be resilient. When the dollar collapses, are you prepared to be on the right side? The debt spiral continues to widen, with Trump now exceeding Biden and Biden contributing nearly $7 trillion to the deficit. More inflation, more debt, and more printing are all predicted by an aging population, growing defense expenditures, and an unstoppable money printer. History might be repeating itself, as was the case with Bitcoin following its 2022 meltdown, when it surged 6 times thanks to covert liquidity efforts. Crypto might climb once more as tensions between the US and China increase, and another huge spending binge is imminent. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
Where do you think that we top out, and what price do you think we top out at this cycle?
I think, well, 2025, my end of year target is 250,000
250
for Bitcoin. I think that we're going to get the maximum sort of bullishness on the amount of money to be created probably in 2026, 2027, especially because in the US, the Fed chair role is up in May 26th. And Trump, maybe they're not going to get a complete political lackey, but they're going to get somebody who is on board with printing the money and doing what they need to do to further accelerate this, make America great again. So I think that we're going to get a much more dovish Fed at the minimum, at the latest from May 2026. So we could see that 2026 to 2027 is absolute bananas. Well, everyone's just like, oh my God, they're just like, they're going to do everything. Everything QE and supplemental leverage ratio and treasury buybacks and like yield curve control. It's all on because everybody's on side with Trump. And then we'll extrapolate a change and that's too large. And then we correct. But that's why Bitcoin's great, because we don't care. We know you're going to print more money. We know that Bitcoin does best when money is printed. I can't tell you what stock's going to do well. Like, that's hard.
No.
But I can tell you Bitcoin's going to go.
Yeah. So in your speech, you said, I think, Bitcoin to $1 million.
Correct.
2028.
Correct.
So what leads us to that?
So Biden issued about $7.1 trillion of debt, net to treasury issuance over his term, right? And we got Bitcoin 6x. Right? Trump was already tracking 22% higher in the first few months of his tenure.
And again, is that spending?
This is
higher
net,
deficit.
This is net treasury issuance.
Okay.
Sorry, that's the deficit. The deficit is cumulatively $7.1 trillion deficit. The deficit's already expanding under Trump, and he's supposedly doing Doge. Yeah, they're cutting stuff. It's a drop in the bucket.
Not enough.
Right? And if you think about the US population is getting older structurally. So Social Security and Medicare payments will rise structurally. They can't stop that. The defense budget is going to only increase, right? They're going to have to reshore production, build a bunch more missiles and bullets and all that sort of stuff, right? And so like, again, the deficit's only going one way. It's going higher.
So what's the path to 1 million?
Yeah. So again, expanded deficit, 7.1 trillion cumulative deficit under Biden. Trump is only going to increase. U.S. population is getting older, so healthcare spending will increase. They can't change that. The defense budget will only go up because, we're talking about this global realignment of supply chains and trying to build it all in the United States and not use Chinese intermediate products. That's expensive, right? So it's going to cost more to buy American stuff. But again, that's not the coin. It's like security and supply chain integrity and that kind of stuff. So the things that drive the budget are only going up, and interest on the Treasury debt, again, is expanding exponentially because even if Trump is successful on his plan, which is 3% deficit by 2028, because of where you started with the size of the debt, your interest costs are still expanding exponentially.
What do you think about ETH right now?
I think it's the most hated layer one, and so on balance, it should do better.
Yeah, exactly. Yeah.
It's most secure, proof of stake, largest number of developers, large amount of value secure, all those sorts of things, right? Obviously, we were trading the rate of change and the expectation. That's why Solana went from 7 to 300, right? The rate of change of adoption of meme coins and transaction volume was really rapid. Therefore, the price went really, really high. But even at its peak at 300, it still didn't eclipse ETH in terms of total market cap, right? But again, we're not trading total market cap, we're trading the price.
Yeah.
So I think that Solana, yes, will it go up? Absolutely. Could ETH outperform Solana if we get this sort of, money printing bonanza and people shift out of Bitcoin into more altcoins? Yes, and especially if ETH starts to show some life, the price creates the narrative.
Yes,
then all these things that we love,
ETH is great again.
Yeah, exactly. Oh, it's got the most developers. That's why I'm buying ETH. Personally, I think Bitcoin dominance is going back to where it was before sort of the 2021 altcoin season, which is like 70%.
Yeah.
That sort of area. And then, people start rotating, right? Oh, it's back above all-time highs. Oh, the bull market's back. Okay, well, altcoins should outperform. See if that the shit is a key word there.
Yeah.
Depends on what you buy.
Yeah.
And that'll give back the animal spirits for people to start going back in the ecosystem.
Yeah.
Like, okay, the bull market is confirmed. We went down, we're from 70 to 110, down to 70, back above 110, maybe at 150 or 200 or some level, like on rising volume, very good looking technical chart. Okay, now it's time to go into the shitter and try to find some gems.
Arthur Hayes presents a convincing outlook on Bitcoin's future, estimating that it might hit $1 million by 2028. His argument is based on the inevitable course of American budgetary policy. Whether Biden or Trump prevails in the upcoming election, the U.S. government is stuck in a vicious cycle of growing deficits and debt. The political will to control spending is simply lacking, as the aging population demands higher benefits from Social Security and Medicare, and geopolitical concerns necessitate ever-increasing defense spending. This dynamic guarantees that money printing will continue to be the preferred method of financing these commitments, according to Hayes. Inflation and currency devaluation are inevitable outcomes of politicians' continued spending to win elections. Bitcoin becomes a logical hedge in this situation, since it is a decentralized, scarce asset that is not subject to conventional monetary regulation. According to Hayes, institutional adoption is barely beginning, especially with regard to Bitcoin ETFs, and demand will only increase as confidence in fiat currencies declines. In the end, Hayes believes that a key factor influencing the future price movement of Bitcoin is the volatility of the bond market. The Federal Reserve must step in with additional liquidity when bond markets falter, which encourages investors to flock to Bitcoin as a store of value. According to Hayes, Bitcoin's long-term value proposition is strong since the economic system is intrinsically unable to curb monetary expansion or cut spending. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.